Hi everyone, I'm Dale Pinkert, and who are you? Hi Craig, Glenn, how are you? Kevin, Andy, Anthony, everyone doing okay today? Kevin, how are you? David, Dennis, Dimitri, both of you Dimitris. Everyone doing all right? Let's have a great day. I have an excellent guest for us today, Steve Anton at the Pivot King. Anyone follow Steve? Know of Steve? His name's familiar to me. I believe it's my first interview. I love Forex gal. Okay, so let's get to the markets. Yesterday, the trading suggestion I made was to short the dollar back at this 92 or so resistance here. I still think there's a shot for us to at least correct this bounce and possibly retrace it all. So right now you have between 20 and 30 pips. So my style is get paid here, take half off. Trail your stop to above the moving average here, 92.20 at the most. So worst case scenario is you made money. Okay, everyone with me on the dollar? So with that being said, if I think that's a potential scenario, it felt like a lower risk trade to me than buying the euro, but I still think there's a chance that we're going to make this move up to new highs. I don't know what this is. And head up towards 21.5. So I still favor another push up. What I'm looking for, if this happens, this is what I think is going to be important, is if and when the euro makes a new high, all I expect out of euro pound would be a correction and a non-confirmation of the new high in euro. You know, maybe we rally back to 1.5, something like that, some type of fib retrace of this. So that would be another non-confirmation. So the evidence of RSI non-confirmations, and I'm a believer that EG needs to confirm moves on both the downside and the upside when you're trading euro. Very important for trade selection. Isn't that correct, Kevin? And I made one other trading suggestion here for you guys, and this might be a little higher risk, probably about BE on it now, and it was the pound Kiwi short. So we were here yesterday. I said we could make a move to 83 for a third drive. That's happened. Okay, you see the non-confirmation here on the 1 hour. It's glaring everywhere. Oh, that's a 4 hour. So here's the one, same scenario. And the daily, actually, I'd be interested in hearing Steve Volge's opinion, because I'm guessing that Steve would say this was an impulsive move to the downside. Look how quickly the velocity, how quickly we got from point A to point B. And I know, you know, we liked it on a breakout here. This is a breakout. There's nothing, it's done nothing wrong yet. But I think there's also a possibility that what we're getting here is just corrective after this decline. And your first clue, of course, would be a negative candle today. And what I'm really looking for closes back under, say, 179.80, 180 to negate the breakout. And that would be a press for me. So you know how Blake has positions on and he builds positions. Sometimes you build them when it's not working yet. There's nothing wrong with building them when you get an additional signal. And a false breakout would be that additional signal. So if we do that, I think there's a very good chance there's 76, even revisiting 74. And if I really wanted to be a bear, I'd look for equality here. This was one heck of a move. Call it 1.916 cents. So this would actually take it under these lows or retest of the lows here. But I don't want to get ahead of myself. Do the right thing today, and tomorrow takes care of itself. For money management purposes, I wouldn't want to see a new high today. So let's see if we get some downside follow through. Oh, hi, Alan. Oh, I'm glad you're enjoying. Yeah, Greg and Steve's views. Okay, Luca. Let me just take a look at what Luca has, and then I'm going to pass it over to Blake. Who is someone that I respect a lot. You know what's nice is, I know you guys say, well, you're part of this deal. But before I joined ForexAnalytix, I always admired Blake's trading and doing interviews with him and even debating positions when we'd be on different sides of the market. So what we're looking at the 10-year, and this is a yield chart. Yeah, so this 265, 270. Yeah. Okay. Yeah, it looks pretty bullish to me. This was a move I talked about last week. I think I tweeted. Blake said, I can't think of one reason why the dollar would rally. So, I'm just looking for, one more push down in the dollar, one more push up in euro. And then I do think there's going to be something in the dollar from the long side. And obviously, if this is right, maybe we get something like this, right? Luca, we started down here at this yield. I can't really read the prices. It looks like 160 to 260. So a full point from recently is going to take us to 3. And if it's a fib extension, I know some guys looking for 3.2, 3.4 on the 10-year. So thank you very much for that, Luca. I'd be careful about UJ shorts. If yields are heading up, it should be constructive for a weaker yen. And maybe this is how we get the blow off in the market over the next couple of weeks to 25.50. Anyway, it could all happen in a week. So with that being said, good morning, Blake. How are you, my trading warrior brother?
Good, man. Sorry, I had to find the unmute button.
Okay, buddy. How are you today, buddy?
I'm good. Good. My wife and I, we celebrated our 14-year anniversary last night.
Oh, congratulations, my man. That's,
Thanks.
You're breaking all the sea. Your hit rate is good on marriage, too.
Well, we've actually been together for 18 years.
Okay.
Married for 14.
Took your time. It took you 4 years to win her over because you married up, right, Blake?
That's right. Either that or either that or it was the fact that my initial losses in trading didn't allow us to get married the way we wanted to for a few years.
You know what?
Either or, that's
Yeah.
That was the long-term trade of his life, Dale. Good morning.
But children are even longer term because call options on marriages. That's why I'm congratulating Blake. They can expire worthless or even cost you. So
yeah,
I mean,
right, guys? You can lose more than the original investment.
That's a disclaimer.
That is a disclaimer.
Maybe that's what the priest or the rabbi or everyone should say at the marriage before you say I do. No, you take this woman and you take this man to be your lawfully wedded husband and wife. Remember that you use risk capital only, and you can lose more than your initial.
Yeah, don't invest more than you can afford to lose.
On the other hand, kids have a big buying premium as call options. You have to pay a lot initially to capitalize on investment later.
The option premium is pumped. Lots of volatility, huh, Steve?
Yeah.
Yeah, it's fine. Anyway, no, it was nice. We went out for some food, and our kids are at that age where we can leave them for an hour or two and they're fine. They've got phones, and we can go out to dinner, and you guys that are parents probably remember that point in your kids' lives where you can actually leave the house for a little bit. So we're at that point, which is nice. We can leave them and go out and grab grab dinner really quick, and so we had dinner and wine at a wine bar, and it was nice. It's actually the same place that we had dinner and wine with a couple ForexAnalytix subscribers. Well, a gentleman by the name of Vince and his wife Patty, just like 2 weeks ago on Tuesday. Matter of fact, it was almost 2 weeks ago to the day.
You know, you really make your trading business family, Blake. That's pretty cool.
Yeah, you know, I've met a lot of our traders in person. So over the years, and that even before we had ForexAnalytix, I've met a lot of our traders in person. And it's nice, you know, it's nice because this way they get to, you know, meet me and I get to meet them. We get to talk face to face and shake each other's hands and have a, you know, break bread and, you know, have a glass of, you know, wine or beer together. It's nice, and I appreciate that.
Looking forward to when the whole F8 team could get together and do that.
Yeah, no, it'd be great. I'd like to do it in Greece. That would be awesome. I'm sure you'd probably enjoy that too, Dale.
Yeah, I'd love it.
Yeah. Well, we'll see. You know, things. You know, ForexAnalytix. I think we got a lot of great stuff in store, especially going into this fall. You know, we have a nice end of season or beginning of season special coming up. We got our chat rooms are being opened up, and you know, when you're in our chat rooms, you get to see stuff like this. So if you're a woman and you're in here, you have to realize that those sometimes pop up from time to time. So anyway, I had to show that because I needed to make sure that I get rid of the oh my god factor, you know, when you're in there. So you guys are all on Jumbotron. You guys can say hi right now while you're in there. I did a couple of trades overnight, just so you guys know. I picked up the Aussie New Zealand at like 110 last night. When it fell in Asian trade. Let's see, here's the Aussie New Zealand. It fell in Asian trade here towards trendline support last night, and then I picked it up again. You can see there's some comments from RBA's low. I think he's the deputy. There's all the guys. There's Ziggy right there, and
thanks for the tweet, Ziggy.
And so RBA is low. He's tried to talk down the Aussie yesterday about rate hikes. The Aussie came down into support Aussie New Zealand, and it bounced right back up. And I got limited out overnight. I just basically put a 30 pip limit to take profits overnight, and I got hit. I also shorted the euro dollar last night at almost the high. I shorted at 94. I had an offer sitting in at 94 for the last 2 days. And you can see it's the 38% retracement, and I put in a limit to sell, and I shorted the euro overnight at 119.94, and I already covered it at 80. So I took a couple of, you know, a few bucks off the table. I am still short the euro pound, but we had the jobs data that we were talking about. The jobs data came out last night, and it's if you remember Stelios's conversation, and I'm sure if he's here, he'll probably chime in. The average hourly earnings is what he was really looking at, or the average earnings index, and that did disappoint. It didn't come in as strong as anticipated, or as hoped. Maybe as hoped is the way to look at it. And the pound did come under pressure. Now, do you remember us yesterday, 24 hours ago, Dale? We were talking about the pound, and we were talking about this channel resistance.
Yeah, and you also were talking about how many false breakouts there have been every time up, and you were saying
right.
Start to get a little leery about the rally.
Right, and so you notice what happened last night is we basically hit that trend line resistance, we hit it basically. It's trend line, but it's also a channel. It's a channel that it's kind of kept us in check. And the thing that I worry most about the cable is that every time we get these, well, this happened this last time, we get this breakout here, it reversed back into the channel. And the risk right now is that we broke out. It looked like we broke out. You know, you had a lot of people getting long the cable, and now we might post a false breakout and end up back in the middle of this channel again. And it's frustrating because you know, if you're on the long side of the pound, which I am, by the way, I don't own the pound dollar. I'm short the euro pound. So in essence, I'm long pound.
Right.
I'm long, you know, Great British pounds right now. So it's frustrating because if this ends up being a false breakout and it does fall from here, we go back to mid range. That's going to be really difficult for my euro pound to continue to go down unless the euro, you know, completely breaks down, which, you know, you guys have seen the euro. The euro's got a really strong, I mean, we got a really strong uptrend here. The euro is going to have to reverse course alongside the pound in order for the euro pound to continue to go down from here.
Isn't that the area of support that you pointed out Monday when we were first coming off Friday's high?
For what?
The euro, what you're showing.
Yeah.
So, I mean, that you said, yeah, you thought it was going to come off. It was a great call, and you had a support zone in mind where you were even going to consider buying it.
Yeah, it would be down here. It'd be right now. It's at 119. So
okay.
if we get down to 119, and so we rejected the 38% retracement overnight. So if this, now I'm just going to talk about the euro for a little bit here. If you have the euro dollar and we are currently, which could be happening, we're flagging, right?
Good.
Now,
Nice.
This is possible, and the reason why it's possible is because when you only have a 38% retracement, it's a shallow retracement. When you get a shallow retracement, that means it's a good potential for a continuation. So shallow retracements to me are like, you know, 38% retracement and less. All right. So now the risk is that we have a bear flag pattern. So if we just stop here and we head down to 119, I'm going to be a little bit more careful about buying the euro dollar at 119 because it might be a flag pattern and we could head down towards, you know, 18 and a quarter if this is the case. Yeah. So I have to be, or we have to be extremely careful about buying the euro if it just stops where it stopped last night. And like, let's say, but by the end of the day, if the end of the day we're trading down towards 119 and a quarter, I don't know if I'm going to be buying the euro at 119 like I thought. And that's why when we talk, like when we're you know, discussing analysis,
Bantering.
and we're bantering, and I go, you know, hey, I'd be a buyer at 119 of the euro dollar. That doesn't necessarily mean I should go out and put an order to buy the euro at 119 because I'm going to buy it when it gets there. Because you got to look at the circumstances on why it gets there and how it gets there. If the euro dollar, you know, like in this example, only gave us a shallow retracement, and it's not, you know, it's not going to roll over, or it's going to roll over quickly, then now I have to second guess my idea of buying it at 119. But if you're not paying attention to the reasons why it is moving down there or how it's moving down there, and just blindly buying or selling it because you see a support or resistance level, you are at risk of getting wrong-sided a lot. You know, because now my tune has changed from just yesterday where I said, hey, or, you know, a couple of days ago, hey, I'd buy it at 119. But now looking at it, if we do what I'm thinking right now and we just, you know, we head down there from here, I don't know if I'm going to be buying the euro dollar at 119. I might really second guess that decision now. I hope that made sense to you guys. But
I agree. You know, how it gets there is important. you know, to me.
How it gets there and why it gets there. Now, we do have producer prices coming out here in a few minutes. Let's say the PPI data out of the U.S. is strong. If the PPI data is strong and we you know, the euro dollar drops immediately, then yeah, I'm definitely not going to be buying the euro dollar 119. I'll be thinking now, you know, hey, maybe I'll buy it down at 118 and change, which is the bigger trend line, you know, in question. All right. So anyway, that's kind of how I'm viewing the euro right now. I want to also take a look at the yen because we do have this data coming out shortly. But the yen, and just so you guys know, I have tried to short this thing twice in the last 2 days, and I've got run over by it like a freight train. I tried to short it at 109, 109.30, the 618 retracement, this one right here. You can see that red line. It was, you know, previous support, current resistance. We got up there, and it went higher than I had thought. You know, we went up to 60, and then, you know, we dipped a little bit, and I got out, so I took a loss there. And then yesterday, we came up to this confluence here at 110. I tried to short it at 110 again, and it continued higher, and then it went up to like 110.30 or whatever. And when it dropped back to 110.10 or something, I got out of it. You know, I lost a few pips in it again. But you notice what it did, Dale. What the dollar yen did is it filled the gap. Yeah. You see that gap? It filled it perfectly. So now that we filled that gap and we have trendline resistance right here, you know, around this, you know, 110.50 or 60, the risk is if it breaks higher. If it breaks higher, you know, you got to be real careful being short the dollar yen, because now we can really start to squeeze. Now, I don't know if we're going to do that. I mean, this is also, to me, it seems like a pretty good setup for a short. But like I said, I've been hit twice trying to short this thing, you know, both times for like 10 or 15 pips. And I just don't know how comfortable I am shorting it right now, especially with stocks at all-time highs. What was interesting is, you know, Apple released its new product, which is the iPhone X, which, by the way, I have to admit, I am very excited about buying that this fall. But you know, the iPhone X, the Apple, you know, Apple stock actually, you know, pretty much held its ground yesterday. So, you know what's also pretty groundbreaking, Dale? The watch. The watch. I had, ever since the initial release of the iWatch, I was like, I'm not buying that thing. I'm not buying that thing. Tethered. It was tethered. Yep, until I can use it independently and not have my, you know, I could use it as a phone. I just, you know, like to do Star Trek. I'm not buying it. Now that it is out, it's coming out, and it's going to have a, you know, an LTE, you know, thing on it. I'm actually thinking about buying one. Now, I am a watch, just so you know, well, I don't know if you know this about me. Most of my old listeners have known this about me. I've collected watches since I was a teenager, actually, is when I started collecting watches. And I love watches. I love everything about them. They're mechanical, and they're pieces of art. And I'm a horologist, if you will. I really appreciate horology. Always have. I think, and it's also it's an amazing trader trait. Like, people who are traders, they tend to like cars and watches. I don't know what it is about that, but anyway, I've always collected watches, and I still do to this day. And I've always had this issue with, you know, since the iWatch came out, like, all right, well, if I can't talk on it, then why in the hell do I want to buy it? It's going to be outdated anyway in a couple of years. But now that they're releasing one that can actually talk, I might actually wear something on both of my wrists. So I might actually wear an iWatch on one wrist and then a real watch on the other wrist, which you know, but that's what needed to happen in order to win somebody like me over. And so maybe that's one of the reasons why Apple actually is this, you know, one of the many reasons why the Apple stock didn't sell off. But anyway, I guess what I'm trying to point out is that the stock market is still holding up near its all-time highs, and then the dollar yen is right up there as well. You know, it's holding right up against this resistance. So let me see. Let me go over to the, well, actually, what we should do is we should probably continue on and hold on to the dollar yen really quick. Gold's holding up pretty well. Oh, I guess we should talk about this as well. Here's gold. I'm still looking at gold as, you know, a possible long if it drops down towards this trend line support, which, you know, is now, you know, 1305. You know, or so. I would be a buyer down there, but if gold drops like that, that means the dollar yen has, you know, spiked up towards 111. I would assume. So we'll continue to keep an eye on gold and the euro and the dollar yen as well. So, Steve, did you have anything that you wanted to mention before this data is released?
Yeah, but it's not connected to that. It's about the Apple Watch. You know, I have an Apple Watch too. You can actually talk using that, as long as your phone is is in proximity. I know
that's great. But yeah, I want to be able to leave without my phone. I don't want my phone with me. I want to be able to walk away and leave.
No, I know. But I'm just telling you that anyhow. You know, for example, I always have my phone with me. So, you know, personally, we were discussing with Stelios yesterday, and we said that, you know, for us, it wouldn't make any difference if you could actually put a SIM in it or not. But I understand that there are people, you know, that have a completely different, you know, view on it, because you might want to, you know, to go out, run, and not even carry your, you know, your phone or whatever. So I understand that it, you know, it has its benefits for sure.
Right.
Not needing, but other than that, the iWatch, the new iWatch wasn't, you know, didn't have any other serious upgrades. But the new iPhone, the iPhone X, looks really good. And as you said, I think that the fact that the market was pricing in, you know, that Apple would do good in this release, and the stock price at the end of the day shows that, you know, it wasn't disappointed, is definitely, you know, a bullish fact for the stock.
So she asked, don't you need a phone for your quotes, Blake? And that's true. I actually, my phone is important to me because I look at quotes while I'm traveling, and he goes, FA coming with watch update. You know, the ForexAnalytix, like the notifications come across your phone or your watch right now, don't they, Steve?
Yes, they do push through.
So you get
compatible, yeah.
Yeah, so you get push notifications. They actually go through to your watch. So if you have an iWatch and, you know, euro dollar support is hit, you get a notification. If there's a new pattern in play, you get a notification as well. But I don't know much about the watch because I don't own one, the iWatch. I don't think you can, there's probably no brokers that allow you to trade from your watch, phone, watch, whatever. I would doubt it. There's not enough screen size to be able to do it. I don't know. I don't know.
Anyway, it would be an interesting conversation piece at a cocktail party or something.
Yeah.
You look at your watch, someone goes, what time is it? And you look at it and you go, it's time to buy the euro.
Right, exactly. That's funny. But I know the FA, you know, ForexAnalytix does push notifications through the iWatch as it stands right now, so, which is cool.
That is very true.
It's cool. Do you get a little buzz on your wrist and all that stuff, Steve?
Yeah, indeed. And, you know, it's lovely because the buzz you can never miss, even if it's loud or whatever. You know, the fact that it vibrates on your wrist, you always know that something came up. While you, for example, let's say you're out at a dinner or whatever, you know, or music or whatever, obviously you're not going to hear your phone just send you a notification. I mean, it's very discreet.
Right. Oh, wait, PPI's out. Like it's in line, huh?
Slightly weak.
Yeah. Actually, the headline number came in a little weaker.
Yeah,
huh?
0.02 versus 0.3.
Yeah,
dollar's coming off a little bit.
Just a little bit. Yeah, not a huge reaction.
USD and Canadian house price index a little bit softer than the prior, 13.1 versus 14.2.
You know, I'll tell you, this Canadian's been probably one of the toughest. Like I've had a few people ask me, like, you know, hey, you know, what are you thinking about the dollar Canadian? Are you thinking about getting long? And I'll tell you, this thing is trading so heavy. Like it's, to me, it's like I don't know why you'd want to be on the long side of the dollar Canadian while it's trading below 123. I don't get it. I mean, this is a good example of something that's flagging right here. You know, you want to look at it like a flag formation right there. I mean, that thing looks heavy and it looks like it wants to continue to break down. Anyway, yeah, so the dollar's trading a little heavier. Euro dollar's pushing back up towards 119.90, and we might actually push above 120 here. So but anyway, I'm gonna pass it over to you guys, and I'm sure you know, I left you a lot to talk about today, Steve. True. And Stelios. So you guys have a great trading session. I'm gonna pass it over to you now.
See you later, Blaker. Good luck.
Thanks, and see you, Steve. See you, Dale. See you, Stelios.
Bye-bye.
Okay. Was that Dimitra or Kaliroy?
That
Okay.
That was the youngest one, Dimitra.
Okay. Kisses. Okay. We have quite a lot to talk about because yesterday we had Grega. So, you know, we didn't have a look at plenty of things. Grega's insight, of course, was, you know, wonderful, and you know, he usually gives me like confirmation or makes me think about what I'm looking, because I know one thing for sure, that Grega is more often right than wrong. I've seen that over and over and over again. And you know, the good thing with Elliott waves, especially Grega, that is, you know, has the time to do Elliott waves in all time frames from the monthly chart down to the 1 hour chart, is that it also gives you both a good confirmation on what the short-term move is, but it also gives you some nice view on how the longer-term price action might evolve. So, for example, you know, that's one of the benefits of harmonics and Elliott waves, that, you know, they give you like quite more specific targets than basic technical analysis in many occasions on longer-term scales. That's actually the main reason that got me involved with Elliott wave, because, you know, for years I was only using candlesticks and the basic technical analysis patterns. First of all, Blake already said that we're getting some kind of a rejection from here. He has also drawn a channel here. I would agree that some type of a pullback is due here, but you know, I would prefer to see some kind of a fib target getting hit after a little retracement. So, for example, I would like to see 134 trade, which is the 127.2, something like that. So I would want to see, before turning lower, I would want to see some kind of a move like this before actually turning lower, now that we've breached several important levels. So personally, you know, I remain constructive the pound here. I mean, I won't be buying it here, but I don't expect it to roll over and die from current levels. So I'm looking for a little bit more upside potential before perhaps rolling over. Grega showed yesterday, for whoever wasn't here, you can always, you know, visit on YouTube, on our YouTube page, you know, the webinar, and you can see, you know, his views. He spoke at the last 30 minutes of the regular time before the interview. Grega thinks that you know, cable is at its last push, you know, of this corrective move, of this of this broad corrective move, and afterwards it's going to roll over and perhaps even push to new lows. Yesterday, I know also that we had a question which I never got to answer, because Grega was speaking. I think Luca mentioned that the bull flag is breaking at the Euro Swiss, and that's exactly the case. So I have nothing to add here. It's exactly like this. This is what I had drawn, and you know, this is what seems to be happening. So I think that for as long as it stays above 113.50, you know, it remains constructive. So, you know, you have a risk that's down here, and the possible reward that goes all the way to 120. Okay, so this is an excellent risk reward, in my opinion. You know, you don't want this to break to be right, because afterwards it means that at least the flag was not the one we're currently watching here. So Euro Swiss is still looking very constructive and interesting. What's also interesting is how the USD Swiss has faked out plenty of times, people. I mean, it was you know, working on this downwards channel. It actually tested the lows of 2016. It then rebounded above the channel. It got rejected from 97.50. It went down back to this area, up again, down to this area, up again. And now what I'm monitoring about it is this blue trend line, because, you know, a break above it is more likely than not bringing us again, once again, at 97.50. And, you know, it's now proven, you know, time and time again that these two areas are extremely important. One of them is the 94.25 area, 94.30, and the other one is the 97.50. Both of them have been tested multiple times, and they've proven their value as, you know, support and resistance. So, you know, if somebody wants to see what the next move is going to be here, you definitely want confirmation by a break of either of those. I mean, I think that a break of either of these areas will lead to an extension to the direction of the break. Let me see. Could you explain how strong your loonie will help our housing market? Yes, of course, Joe. Much of the problem of the heating up of the Canadian housing market is the fact that you get a lot of foreign investors piling in money to buy property. I mean, I know for a fact, because I have a Canadian friend, that there is a lot of property that is being bought by Chinese, Russians, etc., that they just buy them and don't even, you know, don't even utilize the houses. They don't even rent them out. So obviously, an appreciation of the Canadian dollar is going to make Canadian houses more expensive for foreigners, which means by default, you know, that as price goes up, demand goes down, which means that should soften a little bit the interest from foreign buyers for Canadian properties. Because, for example, if a decent amount of appreciation of the Canadian dollar makes properties in another foreign country for them, let's say, more appealing, they might switch to, you know, to being more interested in buying houses there. So that's how an appreciation of the Canadian dollar can, you know, tame down the buying interest for Canadian houses. Any views on USD? Yes, Telio?
I just want to add, Joe is clearly making fun of me because she wrote our mousing market, which was a typo I made when I was.
Oh, sorry, I didn't see that.
But yeah, very funny, Joe. Thank you.
Yeah, that was an epic. USD-ZAR. Okay, USD-ZAR, we've revisited USD-ZAR like plenty of times, and one thing is for sure with the USD-ZAR, there is absolutely no doubting that it is within a triangle. So, you know, triangles, you know, are are created when price action is coiling. We can clearly see this here. And usually when they break out, they get a, you know, a hard push. Very often triangles are like fourth waves, so like their terminal patterns, they lead to a terminal pattern, to a terminal push. So and they usually break in the direction of the trend. So, you know, there is a higher chance that this triangle will end up breaking to the downside for at least, you know, one more move towards there, than to the upside. But it's not going to be the first time that we will have seen a triangle break to the upside. I mean, we've seen triangles act sometimes on occasion like bottoming patterns, like broad bottoming patterns. So in any case, I think there is not much to do here until actually, because sooner or later it will do that, we see a break either above the resistance or below the support. Okay, so not much to do, and you know, by then we're currently testing, you know, an area of support resistance that's in the middle of the triangle. So, you know, if you feel obliged to necessarily have a trade here, probably this is a level you might have a better chance shorting than anything else. Okay, but as I said, I wouldn't do anything until we get a break. It's obvious that we haven't been doing anything for a long time. This is something that you can easily monitor by the fact of seeing how horizontal and close the 50 DMA, which is a rather fast moving average, with the 200 DMA have come. That shows how range bound this market is as well. Okay, so that's what I have to say with the USD ZAR. Dukas copy, Swiss broker has up for iWatch, but I don't have this watch, so I don't know how it works. Okay. Aussie Kiwi, Luca. Okay, today gets me long again, but a close above one. Okay, so Luca is looking to buy the USD yen again at a close above 110.50 for a move to 112.50. Okay, so if you see a close above this, yeah, okay, listen, I'm also watching this channel. We actually didn't close above it yesterday, so I agree with you. We are currently, you know, at an important juncture here with the USD yen. For me, you know, the level has always been like 111.60, 112, but before that we also have the 111 level, because it's a level that we failed to break above plenty of times here. So I would agree that there are several areas of resistance, you know, just above where we currently are. But on the other hand, you know, this nice morning star formation was like a very bullish signal. We also had the RSI divergence. You know, it's I understand why you would be looking to buy the USD yen. On the other hand, we issued like intraday updates yesterday for that. I have to say that both the Bund, this is a continuous of the Bund, and we actually you know, sent to our members like warnings about it yesterday. The Bund, you know, actually turned around. It created this evening star formation, and yesterday it was testing at some point this ascending channel support. So we actually penetrated below it, and we're remaining below it. And you know, having a zoom out, this is a continuous actually. I mean, Wanda uses it, so it doesn't have the rollover gaps. That's why I actually switched to it. So
no, U.S. Treasuries have a weaker look than the Bund, in my opinion. And
yes,
also, Luca, I'd like you to mail me the application to join your hedge fund.
So
I want to be in Luca's hedge fund.
I agree with you. Bunds look a lot more constructive, especially since we had the break above this descending trend line. And as long as we're keeping this, you know, this is a bearish break that we got from the channel. Yeah. But that's on the shorter term. On the longer term, we also have like this area, this high here at 163.90. We also have this support that might act as a resistance again. So we need to be careful. On the other hand, as you very well said, if we look at the treasuries, the treasuries gave us a new high, and they're currently testing the equivalent ascending channel support. Exactly. So having seen this move lower from here, yes, they look more bearish. They look like,
and the 30-year, Steve, looks even more negative than the 10.
Yes, because don't forget that we had some different price action, and that's why we have been talking also about, you know, how the yield works and the yield curve, and you know, whether we've had some flattening, etc. Yeah, I agree with you. So it remains to be seen what's going to happen from here, because obviously the treasuries are actually sitting on major support at the moment. A break below here should at least take us back to the 200 DMA and this horizontal area, which is just below 126. So, you know, I think today or tomorrow, depends on what we do, is going to be important for the treasury. So I'm monitoring this as well. We sent a notification about that as well intraday yesterday. Although we haven't done much since, we've still remained there. Now an update on copper. Copper is moving according to the plan, and now it has given us a very clear break, okay, of this ascending channel. So now the next area of support and what we were initially looking for is between 285 and 295. If copper fails to find support there, that's going to be, you know, a warning signal. So, you know, and anywhere between here and there, if copper wants to remain, you know, bullish, it needs to stall somewhere there. So it needs to just produce like an A, B, C move somewhere towards here, and then starting moving higher again. Otherwise, you know, things are gonna, you know, the game is gonna change completely. Anyhow, this worked out nicely here. Let's see where it leads now.
Yeah, great call on copper, Steve. You saw it at the day, the high.
Yeah, thank you. So
you're not bad, man.
I'm trying not to be bad. You know something? It sounds funny, but the first thing you have to actually achieve in trading is not to be bad.
That's true.
Yeah, because by default, as humans are wired psychologically to be bad traders, because our instincts push us to do the completely wrong thing having to do with trading. I mean, we're completely wrongly wired to do this job. So, you know, the first thing in trading you have to fight is your instinctive urges to, for example, go against the trend in all odds, because we are wired to believe that when something has fallen, produces a good opportunity to buy. When something has gone up, produces a great opportunity to short, etc., etc., etc. Or, for example, when something is through the last exhaustive move, we tend to surrender and say, okay, this thing will never stop. So, you know,
so you have to use a George Costanza method, which I don't know if people are familiar with Seinfeld, but there was an episode that he did the opposite of everything he ever did before, and it worked for him.
Yeah, in essence, that's
even got a date.
Yeah, that more or less is, in a big extent, what somebody needs to do with trading, until you wire up yourself and change up your nature completely. Right. So, you know, so you rewire your brain.
Repetition to form a new paradigm.
Yeah, and I'll tell you something which is very funny. I'm sure many of our friends that are listening in have felt it. Once you are in this transitionary phase, that you've started training yourself to actually think in the correct way for trading, sometimes you get very confused, because by that point you have already persuaded yourself that you have to go against your first intuition, your first reflexive response. But once these reflexes start to get trained and they start to improve, you get to a borderline condition that you're not sure anymore if you're at the point that you should fade your initial reflex or go along with it. And that's a very confusing phase, you know what I mean?
Yes.
Luca, I cannot say that out loud, mate, but thank you.
What's Malacca mean?
Oh, you said it. Oh, come on.
I don't know what it means. Can you say it on the air?
It's one of the most famous Greek swear words, but it's not heavy.
Oh.
You even use it. You even use it between friends. You know what I mean?
Okay. Thanks, Luca.
Okay. Somebody was asking for a Kiwi CAD. Let's have a look at it. Actually, the CAD pairs are very interesting. Yeah, Glenn. Glenn is asking about Kiwi CAD. Okay, Kiwi CAD, you know, had a very a very nice fake out for people here, because we had this very nice clean triangle. We broke above it in a move that looked like, you know, very much impulsive. And what happened afterwards is that it completely collapsed. So, you know, at last time we had a look at it, we were here from what I see, because this is the last drawing I have. And I said, you know, that I would want to see a move, lower before perhaps getting a correction and then retesting the wedge. You know, more or less that happened, but then it completely collapsed. And this move now lower is clearly impulsive. I mean, there is no question that this thing here is a wave 3, okay? I mean, the strength of this move, the momentum and everything leaves no doubt that this is a wave 3 move, which means that if we zoom out, because I remember the general structure was this one, and this trend line remains to be relevant, is that at some point we will get some type of a recovery here. Perhaps it has already started, but I don't think we have seen a wave 4 yet. So that means, you know, that this move is not complete. So we might be already getting a rebound from here. But Glenn, I can tell you one thing for sure, is that the Kiwi CAD still remains in sell the rally mode. Okay, so any decent correction you see and any type of a signal that the correction is ending, short it if you want to be involved with it. This move is not done. Aussie CAD. Aussie CAD actually broke below this triangle, came back to retest it, and is now chopping around here. So no reason to be bullish this either. Obviously, between the two of them, and we've seen that very clearly on the Aussie Kiwi, between the two of them, if you want to be involved in the short side, the Kiwi CAD is the way to go. Okay, the Aussie CAD is holding up much, much better. But, you know, they're all commodity currencies, and as I've said in the past, unless I see something like very, very clean, I'd rather, for example, in the vast majority of occasions, I'd rather, for example, be long the CAD or short the CAD against other currencies, and not currencies that spend a lot of time in general moving in tandem. Okay, so in this occasion, for example, Kiwi CAD had a very nice and impulsive move. So in this occasion, for example, being short the Kiwi CAD would have been lovely. But, you know, usually taking this type of trades is not the best idea, because you have better opportunities out there to be long the strong currency against, if it's a commodity currency, against, for example, the euro or the pound, or depends on the situation, of course, or the dollar, or whatever is weaker at that point in time. Okay. Euros. Yeah, let's have a look actually. Yeah, thank you for reminding me, because first of all, I wanted since yesterday for us to have a look at the pound Aussie and the pound Kiwi, especially the pound Aussie. Why? Because the pound Aussie was in a descending wedge. It broke above it, and now it has also broken above the descending channel. So this is the first time actually that we see some bullish price action in this, and some proven rebound. So if you know, we hold this channel, even if we come down to retest it, I think that we can start being constructive in this for the first time in, you know, in a long period. Now, having to do with the pound Kiwi that you asked, Dale, I agree with you. This move lower was strong, so that makes me a lot skeptical about what's happening now. But on the other hand, you know, the break above this long-term range, you know, definitely was to buy for. I had said that in advance, because even if that only proved to be a corrective move, still the momentum that a break above this zone would create would be enough to give us, you know, some profit, as it happened actually, because we actually moved from 179 to 183. So that was good enough for 400 pips.
Great
but
call.
But a little bit above here, we have the 61.8. So, you know, I'm curious to see what's going to happen from somewhere here, because if this thing here as a general structure proves to be corrective, and us having a move lower, we shouldn't move much higher than this. So I would expect that anywhere between here and 184 roughly, we should see some strong reaction lower. So, there was a time to be long the pair when it broke out here, but I think this is the time to be more cautious about it. Okay, so if you've missed this move, you'd rather be more careful here. I wouldn't be buying it anymore. I would be still holding. Sure, why not? You have no reason not to. If you're still long, you have no reason to dump that position yet. But I would be a little bit careful. So pound Aussie, pound Kiwi, we had a look at both of them. So let's have a look at Euro Aussie and Euro Kiwi. Okay, I have to tell you that Euro Aussie is one of the pairs that has me more confused at the moment, because I see both interpretations. For example, I see this move as impulsive here, higher. So this was clearly an ABC in, under the spectrum, like an ABC, which means that I cannot turn bearish here. So if I had to do something, I would definitely be buying. But on the other hand, we had this nice reversal, and this consolidation can easily move at least once more lower. So would I be buying or selling at the exact level that we're currently at? No, I wouldn't. I would probably hold a little bit more for confirmation. But if I had to do something and hold, it would be buying. Okay. So I don't have a clear short-term bias for it yet. On the other hand, Euro Kiwi managed to, to take us out of position here, as it, it 3 times it broke above the first reversal signal, and then it actually managed to finally break below the ascending channel. On the other hand, I have to admit that the price action is still not very inspiring, and that might actually lead to one more high before actually moving lower, because this can easily end up being another consolidation which should produce one more high. But I'm more or less confident that if this proves to be a consolidation, the next high is going to be one that's going to produce a very good reaction. So I think that the next move lower is going to be a true reversal that will at least be worth like several hundred pips. So I'm still monitoring this. It's bearish in the very short term, being now below the channel. But on the other hand, I can see many interpretations that this will end up just being a small correction. Okay, so in the medium to long term, you don't have a reason yet to be bearish the Euro Kiwi. You can maintain a bullish bias. EuroCAD, on the other hand, finally came down and closed this gap, because if you remember initially when we had shorted this wedge, our target was to fill in this gap, and we hadn't done it. We barely missed it, and this time we actually did it. Regardless, I think it still looks bearish, and I think that the move towards this area of support is more or less going to happen. So EuroCAD, I think, remains for the time being under pressure, and should potentially bring more downside from current levels. Dollar and bonds dismissing weak PPI data. A couple of weeks ago, we have seen it taken behind the said momentum is changing. I agree with you, Luca. I agree with you, although Dale already showed it, and I want to show this as well. This is the DXY. Okay. We had said yesterday, I said that with Greg as well, that dollar has been trying to rebound for a long period of time, and every time it finds the first area of resistance, it fails. So far, we've seen a nice morning star formation, undoubtedly, but we still haven't seen a single resistance of importance break. So
closers over 92.10, 92.20 would be kind of the first thing it did right.
Yes, but I would really want to see a close above 93. That is going to get me more convinced. I mean, you can nimble in being long at a daily close above 92.10, 20, as you said, You can nimbly like put a third of a position, so it's cheap for you to be wrong, and then establish like a full position above 93. That's my opinion. So if somebody wants to jump the gun, personally, that's exactly how I would do it. Like I would just put a toe in the water initially, and get wet above 93. Until then, we can speculate about a potential descending wedge, to talk about how reliable in comparison to other candlestick patterns Morningstar formations are. But the fact remains that from a technical analysis perspective, we still have absolutely no confirmation that there is a reversal coming here. Okay.
Thank you, buddy.
The extreme sentiment is definitely going to help. So the issue with the dollar, as many times with a currency pair or any instrument that is extremely bullish or extremely bearish, the hard part is the first move. Why? Because the first convincing move is the move that's actually going to trigger the market. For example, the people that are short to start considering that this is the place I should cover my position. That on itself is going to bring, higher prices. And then that starts building some kind of a belief that you found the low, even if you haven't, and that can help the market accelerate. But we haven't gotten to that point yet. We might. So we're monitoring, and let's see what happens. Thank you, Dale. Enjoy the interview.
Thanks, Dave. Thanks for covering the board for us today. Great job, as usual. And we have Steve Anton with us today. Thank you, Blake, for your analysis as well. Steve, I'm going to make you the presenter now. Looking forward to hearing your voice, seeing your screen. I believe this is our first interview together. Hi, Steve.
Hello. How you doing? Is this Dale? I guess so.
Yeah, great to meet you, Steve. Thank you so much for agreeing to be interrogated by me.
I think I'm going to interrogate you guys, actually. But anyway.
Yeah, I noticed you have no lack of confidence, that's for sure. And I'm pretty sure that you have plenty of reason and justification for it. I see you sent me some questions, but I'd like to start, this is Steve Anton now. What's interesting to me in the community as people are starting out in the business is how people get from where they started to where they are now. So if you could just give us a little bit, share your journey with us, how it was like for you when you got into the business, how you got into the business, and possibly who influenced you or books that influenced you.
Well, I've been going for about 15 years, but hard, probably within the last 6 or 7 years full time. But what got me into kind of doing my own thing is seeing the amount of misinformation with regards to trading online. I would say 90% is misinformation. And that's why so many few new traders end up making so many mistakes, because they're taught by people that don't post, number one, real trades. Real-time trades are important in deciding who you go with. Someone who posts a trade before a target or entry gets hit is someone who is very confident in their trading. Majority of the traders, majority of websites out there, you have to watch where you go, because a lot of it is just information that you can get for free on boards. So it's a cash business, this business, but you have to know where to go, and you have to put analysts' feet to the fire with regards to trades. And that's why I'm on this show, is to expose traders that don't post their real trades. And I'll be giving you many examples of just the last week of my trades in oil, which was to the tick hit at 47.10, natural gas, which was a 290 entry, which was a to the tick hit, which we're in right now. All my members know on my Twitter those entries before, and we're all in making money. So a lot of this interview I wanted to do is just to give you guys some examples of entries and how my system works. Now, I'm not here to tell you exactly how the system works, because I am doing a course which my wife thinks I'm crazy for even doing, but I really want to build it.
Why?
Because why expose something that works? But I really want to expose something that works because
Well, you're not giving it away free, are you?
I'm giving a lot. I give so much information on my
I mean,
Twitter.
your course, the course that you're promoting, that you're going to start giving, is it free?
No, absolutely not.
Okay, so then you could tell your wife you're doing it to make money.
Absolutely not, and that's why I'm telling you. Like, if
Okay.
anybody, okay, I'll give you explanations why. If anybody's looking to sign up for like $59, $100, if I have to spend my time, okay, with regards to trading, posting trades, do you think someone should be compensated for that? So if you have a site and you spend time, sacrificing time with my wife, sacrificing time to constantly post and tweet, do you think you should be compensated for that? Now, charging $39, $59 a month, I don't care about the money. I don't. That's why when I do my course, it's going to be expensive. I don't want anybody coming on $100 per. I don't want them. I want someone who wants to trade full time, that has the dedication and the hours to put into trading. This is not an easy job. I've put thousands of hours into trading, thousands. If you think you're just going to snap your fingers and, hey, you're going to become a successful trader by
How
just
many
doing
years
this,
did it take you?
a lot of years. I blew up my account at least three times, lots of times, and that's how you learn. And there's no more blowing, because once you have a system in place, a system that works for you, you can start to make money in these markets, and you can start figuring out these markets, how they work. And that's where the time and experience comes in. And everybody that wants to start trading just thinks that they're going to make money off the bat by listening to someone who says, hey, look, you can trade and you're going to make all this money. It doesn't work like that. Just like anything in life, you got to put in your time. And the more time and effort you put into it, and something that works for you, the better it is for yourself with regards to trading.
You can't learn experience. It only happens with the passing of time. And
so you guys want to see some examples?
In that case, it would be screen time.
You guys want to see some examples?
Let's see some of your past examples.
Let's just do this week. I can show you guys thousands of them, but my members that are tuning in, they'll tell you. Here's the crude, 57.05, the entry. Crude went to 57.01, as we know. I got in here. That's on what, September the 8th. This is another post. This is just recently, guys. So I just put this together just for this show. As you can see here in my video on the weekend, the 57.06 was a direct hit. It's in my video. 47.06. That's correct. And 10.50 in the video, you'll see that I speak about crude on a good buy position. And by the way, once it hit the entry point, it skyrocketed. You can see it on the charts, the big green candle.
Do you consider a 60, 70 point move a skyrocket?
Well, when it's done within like a minute, yeah. Go look at the chart. It flew. Yeah. Right? So that was a perfect. Well, whatever.
Well, it's a great day trade. Why don't we just say
how about this? How about this? We got a daily candle here, right? Now let me show you the other screen. Here's the candle. Look at the skyrocket.
Right.
Look at what hits the pivots, right? So my pivots are direct hits. Now I map these pivots. These are pivot indicators. This actually takes time on how the market works. The market works based on symmetry. This whole market works on symmetry. And if you can find the symmetry within this market, it takes hard work. You can find exactly where they bring the price. And that's how I have direct hits on my targets, on my pivots.
Let me ask you this, Steve. Your pivots, I'm sure, are different. I mean, you sent me some questions. How are they different from the pivots that people get on their MT4s, or say, for example, supply-demand stuff that Online Trading Academy charges 20 grand to learn by just looking left?
Okay,
so
those pivots.
How's it different?
Okay, number one, those pivots are widely used. Usually indicators that are widely used do not work. They'll work at some times, but most of the times they don't work. They don't give precise hits. Sometimes they do, but they'll never find the symmetry within the day. The market can change right on open. The algos come in and they just shift the charts. They shift the supply and they shift everything. And that's why it's beneficial for people to map their own pivots. And that's what I've learned myself, is on how to map them and find the symmetry within the market on on what target they're targeting, and when they're going in for a correction, at what level to start buying. So usually people front run the positions. And I'll give you some examples later with regards to crude and gold and oil. Those are very, very bouncy markets. And you have to know what you're doing, especially in natural gas and crude and in gold, because you're going to get eaten alive if you don't pick your entries right. There's people that pick their entries and then they buy more as it goes lower and buy more as it goes lower, and then they blow their account. You got to know when to get out. You got to know the entry to get in. And usually the entry to get in is 3 times more than your level that you think where it's going to go. It's always, it's never going to, it's always larger the move than what you expect. And that's why I use these pivots with other indicators that I also use that give me these precise entries, such as crude, as you can see. And as you can see on my screen, the direct hits. So if we keep on going here, look where crude is right now as of 7:48 a.m. Remember, we got in at 47.05. And this is just this week. You can go on my Twitter and look for past months. And
so do you document your trades based upon what you post on Twitter, or do you show P&Ls?
No, I document my trades. I'm not going to show my account. I can if I want, but that's personal stuff.
Okay.
Maybe when I do my live trading.
I'm just asking so that anyone else, Steve, that lays out a trading plan before it happens would be real to you.
Absolutely. Here's another example on NG, right, guys? Yeah. So NG, this was posted September 7, natural gas. Today is September 13th. Yesterday, or 2 days, last week, we got our fill. As you can see here, posted on Twitter, 291. People were buying at 306. And as you can see from old Pulse, I'm telling them to wait for the L pivot. And we have a fill, a direct hit. 288 was in. And look where natural gas is now. It's above $3. These are real-time examples, by the way. And here's another one. You have natural gas again. This is when it was at 297.2. And if you can see, a trade orange. I really like this trader. He's one of my followers here. He's really good. He asks a lot of questions. And look at this. Don't be mad if I'm asking something off, but why would you scale in to wait for NG? Well, he was talking lower. So I waited because I wait till price comes to me. So if I didn't wait, I would be buying up here. But I waited to get filled, and I got filled, and now it's above $3. See, these are real-time trades. I don't know, there's not a lot of people that post their trades before they actually get hit. I'm sure you've interviewed, you said 700 people. How many of those 700 actually put live trades out?
At least half.
You think so?
Yeah.
But
we're all entitled to our opinion. But I interview a lot of people, and just like you know that when someone is real.
Absolutely. And that's why
I have that same type of discernment. So I'd say at least half.
That's why I'm on this show, because I'm really getting, and this is one of the reasons why I'm actually making my own website. I've been on 2 sites before, and when I did real trades, it seemed like the site owners kind of got mad. Well, I kind of won a lot of people because the trades were live.
What's your hit rate? Someone in our community is asking for your hit rate.
Go on my Twitter. It's really, well, it depends on each person, right? I trade with a big account.
No, I mean based upon your account.
I would say I have very small losses and very big wins. So you can get hit 6 or 7 times on a position and lose 1 point, 2 points, 3 points, 2 points, and then all of a sudden you get a monster. I have stops. My stops are very tight. Very tight.
Well, I know we post hit rates on our trades that are called, before the fact. I just thought maybe you'd have that. So no answer for you on that, Jess. All right.
Well, hold on for a sec. It's pretty. You can look at the Twitter and you can see the amount of response.
I'm surprised you don't know. That's all. It's just a normal statistic that a lot of people ask. So Yeah, they want to know, hit rates. It's just part of the accuracy of trading calls.
Well, number one, my site's not even up yet. It's still being done.
Okay.
But majority of my time comes to trading and my homework.
Yeah.
So the people that are on right now, if they want to sign up, they can sign up. Especially I've started in February, my Twitter, it exploded. And you can go to my notifications and read them and see my hit rate from there. It's really good. So, I'm not gonna, sit back and say, hey, this is my hit rate. If you like what I do and you find it good, sign up to the course. But I'm not taking everybody. I'm telling you right now, there's only a certain number of people, and you have to be approved, and you have to sign a non-disclosure agreement, and there's going to be some terms within it. I don't really care about the money. I don't care how many people I have. I don't. And that's why it's taken about a year for my site to get up. Because if I really cared about the money, my site would have been up in February when I went live. It's been on hold since February. Like, why would you make money on your course? If you're an actual trader, you can make way more money than a subscription service. The only reason why I'm doing it is, I don't know about you guys, but when you stare at screens for 12 hours a day, and sometimes you don't even make a move during the day, wouldn't you want something to occupy your time, waiting for a trigger? And that's why I want a website. And that's why I went to websites before.
I really enjoy helping people. So I mean, that's a major reason why I do it. Yeah, I also understand that we all have to make a living too. And even the best traders in the world, guys like Rich Dennis, who trained the turtles that are probably as good as me and you, he had drawdowns, and he had a secondary business. He had a clearing firm at the Board of Trade. So yeah, it's always good to have even more than one income stream as a trader, because everyone has drawdowns, right, Steve?
Absolutely. I have a successful search engine optimization company myself that I own, but I have two managers that run it. It's always good to I'm in heavily in real estate with my brothers. We bought an apartment building, 7 years ago for 93 units. It's tripled actually in Toronto. So our real estate side, it did very well. We got it for 6.4 million. Now it's worth about 17.5 the one. And that was in 2 years. Toronto's real estate skyrocketed, and it's still high, but I see it coming down now. And I sold a lot of my property in there, and I'm waiting for a slaughter to buy up more, which is coming. Anyways, but with regards to the trading and having your own website, I've been on sites, and a lot of the sites, it'd be like, they don't like you posting real trades. And I don't get it, because you help their subscriber base. I guess it's ego based on them. So I said to myself, instead of me going on other sites, especially with the knowledge that I have with this search engine optimization, I'm going to do my own site where I'm the boss and I can do whatever I want. And that's what I'm doing. And I want to help as many people as I can, but I'm only going to help people that are dedicated to trading. If you want to do this full time and you're going to put in the time and the sacrifice, not talking hundreds of hours, thousands, you got to be looking at your screen 12 hours a day. This is not an easy job. And anybody that tells you that this is an easy job, they're lying. It's a tough job. These markets change every single day. You got to be on these markets. You got to live, breathe, and excuse my language, shit these markets.
All right, let me ask you this, Steve. I get this question a lot. People come to me and they say, Dale, can I trade for a living with a $10,000 account? I tell them, yes, if you want to live beneath an underpass. What's your answer to that question?
Absolutely, you can. There's a saying there. Do you know what 1 cent can make if you double it for 28 days? So add 1 cent. Day 2 would be 2 cents. Day 3 would be 4 cents. Day 4 would be 8 cents. How much do you think that would be in 28 days without searching it online? Give me a number.
I have no idea.
1.3 million. Do you know what it would be in 30 days? 5.4 million. Starting from 1 cent, compounding it for 28 days, you got yourself $1 million. Trading is patience. Trading is sitting back, waiting for all pieces of information to pull the trigger. You want to trade every day, hundreds of trades. You're not going to, you wait for the setup, and you get the setup and you wait. You double your money every year. Within 5 years, you're set.
Let's see your pivot, Steve. Let's see what you got.
All right, let's go for more. So do you want to see the low that we got, 24.1575 on ES?
Sure.
To the tick? Okay, this was the low. To the tick, 24.75. And as you can see, look at that bounce. This was told before it gets hit. It was actually told at 24.73. So we waited and we shorted actually. We got this whole move, we covered our shorts, and we went long right to the tick.
Okay, so I'm sure there are times you're wrong. How do you manage
Of
risk?
course. Stops. My types are very, as soon as my pivots get broken, especially the L pivot, I have a 2-point rule. That 2-point gets broken, the pivot gets broken. As you can see, the L pivot broke here, but you'll see in a lower time frame chart, it would stay around here. Once it gets broken, you kind of look for a retrace, and it ends up hitting the T target. So there's a way on how these pivots work and how the system works, that if the pivot gets broken, you're going to look for the lower target, and it usually, high probability it hits. If it doesn't and goes the other way, you're stopped out. Remember, small losses, big wins.
So let me ask you this. Do you scale into your positions on entry, and do you believe in taking partial profits on your position?
Yes. Here's a partial profit here on NG. When we got the low on NG 291, I would take the partial profit out my L pivot, which is 50%. So if you go to my Twitter now, let's just say right here, I'm just giving you guys what I've just posted today. Here's my gold, 1472. We've been riding gold from 1180. All of us have been making a killing on gold, buying all the dips and silver too. NG, when we got in that position, I took 50% off L. As you can see, I'm selling another 25% on my T target. 25% will be left as soon as my T target hits 3112. The rest of my position is put to entry, which was 292. So I'm managing my risk. When my move pulls away from my entry, I move to entry. What's the most you can lose by putting a position to entry? You have no risk.
You mean a stop loss to break even?
You got it. But taking profit along the way.
Mm-hmm.
So I took already 50% down at 3. It's on my Twitter. Everybody here knows.
So I notice you have some bands in there and some moving averages. So that's part of your
That's not moving
setup.
average. These are moving. This is like my own personal indicator. It looks like moving average, but it's not. These are VWAM bands. These are VWAM bands that I use. They're not Bollinger bands. They're VWAM bands. Yeah. Okay. Here's some other stuff if you guys want to. Here's a 330 algo hit. Sometimes, like what I wanted to explain to you guys is when you look at this market, you can tell when the algos are going to hit a specific target at a specific time. And it's not the first time I've done this, and many people that I speak to on a regular basis see this as well. And it's the algos looking towards times. And as you can see here, I said the 330 high. This was September 6th. All these guys know, and as you can see, the target was hit right at 330. And as you can see, 15 more seconds. I'm in Europe, so you're seeing a different time, by the way, with my Twitter here, but this was 330. And there's other ones too here. So what I'm trying to say is when you have a feel for the market and you feel, and that's when it happens when it hit. As you can see here, you see the red, and then you're going to see more red. And I'll show you the end example, what happens once you hit the target. So this was the other pores I said, and more red, as you can see here. And this is how it looked after it hit the T target, if you can see here. Oh, that's not the one. Hold on here, guys. It's right here, I think. So when are you launching, Steve? I should have launched a long time. Guys, like, look, I'm being serious. I asked for reviews. And members, if you're listening, I've asked for reviews for my website. I've never had so many reviews to my email, and my site's not even up. I started my Twitter in February. The only reason why I'm doing this is because there's a lot of fraudulent traders out there, and I'm exposing them. Whether you like me or not, whether I'm directive, whether I'm straight to the punch, I really don't give a shit. The people that are on my Twitter and see the real trades, I'd like to teach them and help them beat these algos and these traders in these markets. Because Wall Street, I can tell you something. A lot of those traders from JP Morgan and Goldman, they don't know how to trade. They know how to fix the market. That's what they know how to do. So if you know how they fix the market, you can go on the bandwagon. And that's what these pivots and that's what I'm here to help. If you don't like it, cancel it. But I tried my best to expose what I see. And you know what? It works. There's not many things that work out there. There's not. A lot of people talk the talk, but the thing is, can you walk the walk? And that's what I look for. So when I hear traders up, blah, 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 give a target. This is what's going to happen. This is what's going to happen. But, you know, they tend to talk after the move starts. Like that's what I've noticed is a lot of people talk when the move has already been made, but they don't talk about before what happened when the move was going to happen. So that's what I look for. And I think that's what a lot of people are starting to understand, because a lot of people have been burnt in these markets. There's not a lot of traders anymore. They're broke. There's not a lot of traders in this market. They lost their money. That's why they do $2,000, $3,000 options. Options are going to kill you, especially in this market. If you do options and you take a position in options, the trade should work for the first 20 minutes. If it doesn't, get out. You're going to get killed. So there's a lot of people doing things, and I see that they're doing things wrong. And that's why I have my account, to help as many people as I can so they can become better traders. And the people that want to listen and put in the time and the effort, like I sacrificed, even my wife, thank God she's on board now, but you know, if you really want to get into this, you got to sacrifice a lot of things in your life. You got to put in the time. This is not going to work by just, you know, reading some articles or, you know, I suggest you open up a practice account, find what works for you, practice what works for you, and find a system that works for you. And once you start seeing it make profit, start to go live. Don't go right into the fire. These sharks will eat you alive. You won't last. I'll give you a couple months. You'll blow your account. And anybody that tells you different, believe me, they're lying. Because this market, especially these ones, they'll eat you alive.
Okay,
So,
Steve, so
take my message.
anything you want to wrap this up with?
Yeah, I just, you know, traders that are listening, people that you listen to, put their feet to the fire. Ask them for trades. Ask them for examples. And, you know, don't believe everything you hear. Do your own research and put in the hours to become a successful and profitable trader and find what works for you, as I found what works for me. You're more than welcome to hit my Twitter, the Pivot King, and you know, I can teach you as much as I can when I have time. But when the site's up, you know, there's going to be a select few that I choose, and I'm going to create my own army and tackle these markets. And hopefully everybody makes money together. And that's why I came on your show. It's my first show. I don't like going on shows, but I really got started to get pissed off on what I see on a lot of other Twitter accounts and these sign-up services that promise you the world, and people blow their accounts using them. So
maybe just keep an open mind, Steve, that you're not the only one that's legitimate out there.
Absolutely, I'm not the only one.
And also something I've learned, and I hope you don't. It's biblical. Pride comes before the fall. So stay humble and spend your energy. As it looks like you have a great tool for your own account and other people's account. And I'm just mentoring you a little bit here, Guy. Don't waste your energy on trying to, you know, be the fraud patrol. Just do your thing, and the cream always rises to the top, and the charlatans end up melting away anyway.
I totally agree. And there's another biblical passage that I like you to know. By spreading good and good energy, the good comes back to you. And maybe that's why I became successful as a trader. by helping other people. By exposing fraud, you're actually saving people. So the time that I spent and my energy spending helping and trading people to trade the right way and a trade for themselves gives me energy to keep going on these markets.
Yeah, you reap what you sow.
You got it.
You plant good seeds and you have a great harvest. So
absolutely,
I wish you continued perfection.
Thank you.
And you know, good luck to you with your new site, and thanks for taking time to address our community.
Thank you, guys. Great being on your show. Take care.
All right, Steve.
Take care,
Anton, you can find him at the Pivot King. The Pivot King.
besttraders.com. Yeah.
Okay, and he'll show you his pivots from his throne because he's the king. And
you got it.
And guys, that's it for us today. Good hunting the rest of the day. And remember, don't just count your pips, count your blessings. See everyone for Thursday. Adios.